क्वेश्चंस पुराने ही आ रहे हैं।
Recording in progress.
नेक्स्ट मेरी सुबह की ही है। हम्म, नहीं, सुबह की आ रही है सर। नेक्स्ट तो जा ही नहीं रहा है, नेक्स्ट में कुछ नहीं आ रहा। ठीक है, अभी भी मिक्स ही हो रहे हैं, रिफ्रेश कर। क्वेश्चन अभी पूरे डिलीट हो गए, कुछ भी नहीं आ रहा है। आप टेस्ट डालिए एक। नो डेटा अवेलेबल, नहीं मैं आपको मेरा स्क्रीन शेयर कर देता हूँ पूरा। अभी यस। ओके। एक सेकेंड शेयर। ठीक है। थैंक यू सर। Good evening, students. Sorry for the delay. There were some technical issues, so we had to solve that. I've not received your messages, so people who had sent those messages, you could resend it. Aisha Patka, why students will not be able to attend today? Is there any other thing happening? Today, our topic will be on payment of taxes, wherein we will understand how to make payment of tax and what are the modalities involved in it. So it's just not that you make the payment of tax and you're done away with it. So whatever taxes you pay, it has to get utilized in a particular manner. Okay. So how you will utilize it? You have two ledgers. One is all your credits get accumulated. How is that credit getting added? And how is the uh, how is the payment of the credit getting utilized and how is the payment of your cash getting utilized? So that's the reason uh, there are complete modalities on how this is paid. Okay, some questions from the previous sessions are if one branch is Mizoram and another in Kerala, limit only registered need in Kerala enough. Not clear with your question, Kiran. Please explain your question correctly. So, what I understand from your question is if there is, okay, so if there is one in Mizoram and one in Kerala, if the limit, the aggregate turnover crosses, then we will have to see that if the aggregate turnover is crossing, you will have to register firstly. Then for the limit in Mizoram, you will have to see whether the limit is crossing in individually Mizoram because you will have to see the taxable supply also. So you have to see the aggregate turnover and you have to see the taxable supply. Is the taxable supply limit increasing? Then you will have to take registration. Yeah, if the supplier and recipient both are unregistered and GTA is registered, then GTA can make e-waybill. Yes, GTA can make the e-waybill. Sweetie Kumari on 10.35 will not be able to take up now because we'll have to proceed with our chapter. At the end, you could, if we are able to finish it before time, you can then request this point. We will try to take it at that point of time. Okay, so now let's get into the topic for today, payment of tax. So what payment of taxes sees is what payment we do, it goes to which account so that we know that how we should utilize our payment. Okay. So whatever CGST payment we make, it goes to the central government. Whatever payment of SGST or UTGST we make under the SGST and UTGST Act. So in your invoice, if there is an intrastate supply, you will collect CGST and SGST, right? So CGST goes to the central government, SGST and the UTGST goes to the state government or the respective union territory. IGST again goes to the central government. And apart from these payments, what we collect from the invoice, there are other payments, right? Which is TDS payments, which on a supply what I make, there are certain authorities like government authorities, they have to deduct the TDS. So that is the TDS payment. And if I make any transaction through an e-commerce operator, then the e-commerce operator will have to collect TCS. Okay, so that is the TCS payment. So this is the various sources through which the taxes gets added to the government's thing. You will see the status every month that GST collections report has been generated. That collection report will have information of all of these heads, right, including the TDS and TCS. And apart from that, when there is any assessment, we will make payment of penalty and interest, right? So that is also another source of revenue for the government. Any interest, penalty, fees, and any other payment what we make is also getting added here. So these are the various sources which we will make the payment of taxes to the government for. Ninchi, your question is if working and head office is in Mumbai, okay, and storage of goods are in Tamil Nadu, what is the place of supply? Where you supply, that is the place of supply. Okay. So if you are supplying it to the head office, then that is the place of supply. And if you are supplying it to the storage of goods in Tamil Nadu, that is the supply. So it depends on where you are supplying, that becomes the place of supply. In the previous session, we solved 3 cases for MMT and 1 leg in ship and yes, and other the same. In first case, it is only 1 day because cargo is other than MMT and 1 leg in ship. So we took a condition where it is a multimodal transport, then it is 20 kilometers. And if it is other than multimodal, then it is 200 kilometers per day. So that is the limit. What is the difference between TDS and TCS? In technicality, it is actually same because both will deduct the TDS, deduct the amount from your transaction. But TDS, the parties who deduct TDS are different, and the liability to deduct TCS is different. TDS is on the government and TCS is on the e-commerce. So that's the primary difference. Okay. So how this system works is once we apply for registration, there are electronic ledgers which are also called as e-ledgers which gets generated. Okay, once we do a registration, we get our registration certificate and we get a login to the GST portal. When we get login to the portal, automatically there the electronic ledgers gets created. Okay, so there are 3 ledgers as you are aware of: electronic credit ledger, electronic cash ledger, and the electronic liability ledger. So first category of ledgers is those ledgers which are prepared and updated by the taxpayer. So the taxpayer prepares it and updates it. They are firstly electronic cash ledger. So whenever a taxpayer makes payment from his bank account, that gets added to the electronic cash ledger. So it doesn't happen that when you file your returns, from you directly file the returns and the payment happens. No, the payment first goes to the electronic cash ledger. From the electronic cash ledger, it goes to the liability ledger and the payment is like completed. Okay. And all the credits what we get, whenever we make any purchases, we give our GSTIN number, right? When we give our GSTIN number, the other person uploads a statement of all his outward supplies, which is called as GSTR1. So in GSTR1, our GSTIN number will be mentioned. And if he's mentioned the details correctly, that gets accumulated and comes to me in a statement called as GST the form 2. Okay. So GSTR2B is the form wherein I will see all the credits what I've got. From the GSTR2B, I will say, okay, these are the credits which is I'm entitled, and I will claim it in my GSTR3B. So I am preparing the returns. Based on my returns from the GSTR3B, the amounts get accumulated and gets added in the electronic credit ledger. That's why these 2 ledgers are the ones which are prepared by me. Okay? And the ones which is prepared and updated on the basis of return is a electronic liability register. So based on the returns, whatever is the liability, the numbers are pushed to an electronic liability register. So these 2 returns are prepared by me, and this liability register is prepared based on the returns what I file. Okay? So just for the thing on the question on explaining in Hindi, whatever I've explained in English, same thing I'm repeating here. कि जब हम registration लेते हैं, तब electronic ledgers या e-ledgers create हो जाते हैं. वो 2 तरह के हैं. पहले है जो टैक्स पेयर अपडेट करता है इनडायरेक्टली. डायरेक्टली लेजर्स में तो नहीं जा सकता है, लेकिन उसके इंफॉर्मेशन के बेसिस पे ये लेजर्स क्रिएट होते हैं. वो 2 तरह के हैं. फर्स्ट इज इलेक्ट्रॉनिक कैश लेजर. जब भी आप बैंक में पेमेंट करते हो टैक्सेस के लिए, ऑनलाइन पे कर सकते हो या ऑफलाइन, जब आप पेमेंट करते हो तब वो अमाउंट आपके इलेक्ट्रॉनिक कैश लेजर में एडअप हो जाएगा. फिर आप उसको टैक्स पेमेंट के लिए यूटिलाइज कर सकते हो. और जब आप परचेज करते हो तब जो वेंडर आपका जीएसटीआई नंबर मेंशन करेगा, वो क्रेडिट आपके इलेक्ट्रॉनिक क्रेडिट लेजर में चला जाएगा. ठीक है. तो ये दो बेसिस आपके वर्किंग के बेसिस पे है। तीसरे तरह का रिटर्न है जो है रिटर्न्स, आपके रिटर्न्स बनाने के ऊपर वो जाता है। जब आप जीएसटी या 3B फाइल करते हो, तब आप आपका लायबिलिटी बताते हो कि मेरे इस साल इस महीने में इतना टर्नओवर है और उसका टैक्सेस कुछ परसेंटेज ऑफ द वैल्यू ऑफ टैक्स है। ठीक है, ऑफ द वैल्यू ऑफ सप्लाई, उसका परसेंटेज पे आपका टैक्स है। तो वो जो टैक्स रहेगा और रिवर्स चार्ज का टैक्स रहेगा, वो दोनों मिलके इलेक्ट्रॉनिक लायबिलिटी रजिस्टर में एडअप हो जाते हैं। ठीक है, तो आप जब रिटर्न फाइल करते हो, उसका लायबिलिटी इलेक्ट्रॉनिक लायबिलिटी रजिस्टर में एडअप हो जाता है। ठीक है, तो तीन तरह के लेजर है: इलेक्ट्रॉनिक कैश लेजर, इलेक्ट्रॉनिक लायबिलिटी रजिस्टर एंड इलेक्ट्रॉनिक क्रेडिट रजिस्टर। Is electronic cash ledger another name for bank account of taxpayer and GST, sir? You could say so, because like how you make payment to a tax payment, deposit some amount in your bank account. Similar to that, you are keeping a separate bank account with your GST number on the GST portal. Once you make a payment, it is like a bank account that it gets added to your electronic cash ledger, and the amount sits there. That can be utilized for some purposes, and electronic credit register can be utilized for certain purposes. So we'll understand for what basis you can use electronic cash ledger and what basis you can use the electronic credit ledger. Now, overview on the payments is the relevant sections is section 49, which says that any payment of tax, interest, penalty, and other amounts has to be made in this manner. So, and that it also mentions about the maintenance of three electronic ledgers, which we have seen now. So, section 49 is the one which authorizes the maintenance of three electronic ledgers, and it says the mode and the method of payment of tax, interest, penalty, and any other amount. Then section 49A provides the methodology of utilization of ITC. How the ITC should be utilized will be discussed in section 49. Section 49B says order of utilization of credit. Okay, so both are saying utilization of ITC, and order of utilization is given in 49B in more detailed manner. Then section 50 is on interest on delayed payment of tax. So if you make delayed payment of taxes, you have to pay some interest. That power of interest is coming from section 50. Then section 51 says the circumstances in which TDS becomes mandatory. What are all the conditions when TDS becomes mandatory? Then section 52 says circumstances when TCS will be collected by an e-commerce operator. Like all transactions of e-commerce operator are not liable to TCS. Only those circumstances which are specified in section 52 or authorized in section 52 will be liable for TCS, not everything. Section 53 talks about transfer of input tax credit, when you can transfer your input tax credit, and 53A says about transfer of certain amounts. So this is the gist of the full payment chapter. Of course, after this we have some rules, but the main section is this. Debyajyoti, how my electronic liability ledger arises. So you have a liability, right? Because you are making payment of taxes. So when you make payment of taxes, your liability arises. So when you initiate or mention the details of your payment in your GST returns, that amount gets added up in the electronic liability ledger. Then if you have any kind of adjudication or assessment going on, then the tax officer also can determine the tax liability. So that liability also gets added to the electronic liability ledger. So liability ledger can come from two sources. One is from your returns, and another is from the returns and from the tax officer's perspective. Kiran, what is your question? Yeah, in terms of your question on Mizoram and Karnataka, but limit is exceeded in Karnataka, only registered enough in Karnataka and not applied between, and no supply between two branches. So you're saying in Mizoram there is no transaction, But only in Karnataka you have one branch is in Mizoram and one branch is in Karnataka. So in that case, if you do not have any supply in Mizoram, no taxable supply, you don't have to register in Mizoram, but you will have to register only in Karnataka in that case. Clear? Now, what is the basics is liability is on supply is determined in monthly returns. Correct. On your supplies is determined monthly returns. Presently, it is in through a return called GSTR 3B, but payment is made through various sections. So return is under one section, but payment is through different sections. Liability is not completely paid in cash. Okay, so the liability you will pay in cash and credit in both the ways. So when you say you have made a X amount of supply, you have made say 50,000 worth of supply in this month. In your returns, you'll mention 50,000 and the respective tax payable. Then, so it doesn't mean that 50,000 into 18%, which is 9,000, you'll pay fully from your cash ledger because you have credit lying also, right? So on the 50,000 transaction, 9,000 is the liability that will come in the electronic liability register. From there, you can pay it from your electronic credit ledger and partly from your electronic cash ledger. So if I have sufficient, if I have 50,000 balance in my electronic credit ledger and the liability in my example was 9,000, you can utilize fully from the 50,000, 9,000 of credit and make the payment. You don't have to make any payment from your cash ledger. Here, so that's how liability ledger is used, and there is an interaction between electronic credit ledger and a electronic liability register. Liability is not paid. That's how it's not paid completely in cash, but it's paid partly in cash and partly from credit. The provisions of CGST, whatever we are talking of CGST, will be made applicable to IGST also by Section 20. So Section 20 of the IGST Act says that a lot of provisions of the CGST will be made applicable to the provisions of IGST also. Filing GSTR 3B, the tax payment appears in the electronic liability ledger. Correct. Credit side of electronic credit ledger is auto-filled by GSTR1 of the supplier. Not necessary because all the GSTR1 data is not compulsory that it is your credit. Like if somebody has supplied to you and you are a supplier, then it is your credit. But if somebody is supplied to me, and if that credit is appearing in your credit ledger, then it will be incorrect that you claim it, right? So GSTR, the credit ledger is not auto-filled. It is you as a taxpayer, you will have to check whether whatever is appearing in your GSTR 3B, GSTR 2B, basis the GSTR1 filed by your suppliers, whether you are entitled. So you will decide whether you are entitled or no, and then update the amounts in your returns. From the returns, it flows to the electronic credit ledger. What if we don't have any credit? Then we will have to pay it fully in cash. So if you have credit, utilize. If your credit is zero, no purchases for this month also, then you will pay it from your cash ledger itself. So Rule 85 says about the electronic liability register, which is in a format called GST PMT01. Then Rule 86 deals about electronic credit ledger, which is GST PMT02. And Rule 87 is on GST PMT05, which is the electronic cash ledger. So electronic liability ledger, register, electronic credit ledger, and then electronic cash ledger. Rule 85, 86, and 87 respectively. Maintenance of taxpayer-wise electronic credit ledgers. There will be 3 running electronic credit ledgers, which will be maintained on the dashboard of taxpayer by GST on its portal. So you don't have to prepare these ledgers. You just have to have maintenance of your outward supplies and inward supplies. Have those records, update returns. From the returns, these numbers gets updated. So only thing what you'll have to do is you have to make payment in your electronic cash ledger from your bank account. That maintenance also you don't have to do. You don't have to maintain a separate electronic cash ledger. The ledger is already there in the GST portal. Once you make payment, it gets added up. Once you utilize the amount, it gets reduced. Okay. Can we use credit only for payment? We'll come to that, Mayur. The detailing I will come you. So the basis how you can use your electronic cash ledger, for what you can use electronic credit ledger, will come to that. GSTR 2B remains constant once it is generated. Yes, that remains constant. Unlike GSTR 2A, which was not constant, but GSTR 2B remains constant. Is the ITC of invoice showing in GSTR 2A, which is not showing in 2B, also added in credit ledger? Only those credits now, which is appearing in your GSTR 2B, you will have to consider and put in an electronic credit. So the apart from tax, if there's any liability for interest, any liability for late filing fees, because if you file the returns late, you have a late filing fees, the late filing fees and penalty, which is towards CGST, SGST, and IGST. Separately, it will come. So you will horizontally, you will have the heads, and vertically, you will have the categories of CGST, SGST, and IGST. Okay. So this record is maintained electronically on the GST portal. That is the electronic liability register. All your liabilities in terms of tax, interest, fees, and penalty, headwise it will come there. Because you will also mention the headwise details in your returns. From the returns, it will get auto-populated here. The tax liability register will reflect the total tax liability of a taxpayer after netting for the particular month, right? Because if you have utilized the credit, then nothing is payable. So it will offset that and show the net liability. ITC ledger, which is your electronic credit ledger, the input tax credit as self-assessed in the monthly returns, because your monthly returns has to be self-assessed. It need not be assessed by somebody else, right? So we will have to self-assess our input tax, whichever is appearing in GST 2B, you will do a self-assessment to see which is the eligible credit, which is not eligible credit, whether the credit belongs to you or not. So you cannot say that the supplier who is supplying and the data is appearing in GSTR 2B. So everything is correct. Not necessary, right? So you will have to do a scrutiny of your GSTR 2B and claim only those credits which you are eligible and entitled to. So if wrongly somebody has given you a credit, you cannot utilize that. You should not utilize it, even though there is no stoppage, because in your electronic monthly returns, right, you can update the number in your input tax credit. So it is not getting auto populated from anywhere. You have to feed the number. So when you feed the number, if you are mentioning a wrong amount, then you will be liable for interest. So you will have to mention a correct amount and have the justification for that. Okay. The credit in this ledger can be used for making payment of tax only. So somebody was asking what is the basis or what you can use the electronic cash ledger and electronic credit ledger. So electronic credit ledger, which is called as the input tax credit ledger or electronic credit ledger, this can be used for making payment of tax only and not any other amount such as interest, penalty, fees, etc. So the credit what you are getting, that is appearing or getting accumulated in the electronic credit ledger, and you can utilize that only for payment of taxes only and nothing else. How can we adjust late ITC credit? Okay, so the ITC credit is a credit which appears based on the returns what I filed. So whether you have filed the returns on time or you have filed the returns later, if you have claimed the credit on time and followed the section of input tax credit, okay, if you have followed the provisions correctly, then you can claim the credit within that time. So let's take an example with numbers. Now, April month's purchases, right? It is there in your credit. Now, when you claim the credit, you have to claim it within time. There is a credit of 1 lakh rupees of April. I filed the return in May. So I'm eligible for full 1 lakh. Now, May return, I have purchases for the month of May up to a tax credit of 2 lakh rupees. So if I have a credit of 2 lakh rupees, I can claim it once I file the return. Now, what is the time limit to claim the credit? What have you learned on that? Till what time can you claim the credit? 6 months. Where is the mention of 6 months in your input tax chapter? Correct. Harish Ankur, you have given a correct answer. Venisa, 1 year from the date of invoice. So you mean to say that if I have purchased something and that credit is, he is raised an invoice on April 1st and 1 year ends on 31st March. So I can claim it only till 31st March. September of the following year? No. 180 days from the date of supply? No. As per section 86, credit can be claimed till 1 year from the date of invoice and in all other cases by November return. No. 1 year from the date of issue of invoice. I don't know why are you getting confused with this 1 year concept, because credit period is very clear. Like many have given a correct answer. Switi Kumari, Harish Chandar, Ankur, Deepak Jha, Hemlata, uh, Avinash. So you have given a correct answer that the claim of credit can happen till 30th November. Okay. So when we have purchased anything for 23-24, like this example of 1st April 23, if I made any purchase, I can claim the credit up till say 1st of April 2023 is the invoice. I can claim it in the return, whatever I file before 30th November. So even 23, 24, then 24 also you get 7 months time, right? Till your filing of October return, technically you can claim it, provided you file all the returns from April to October 24 within the time limit. Okay, which is the 30th November. Before 30th November, if you file it, then you can claim the credit even of 1st April 2023. Okay, 30th November or filing of annual return, whichever is earlier. So if you have filed your annual returns before that, that becomes the last date. But if you file your returns late, then 30th November becomes the date by which you can claim credit, all the credits of the previous year. Clear? So ITC can be utilized only for payment of tax. We know the time limit up till which we can claim the credit. Now, once we have claimed the credit, what you can utilize the ITC for? So firstly, once you have utilized the credit, there is no validity period. Okay, so the time limit is to claim the credit. Once you have rightly claimed the credit within the time limit of 30th November of the subsequent year, okay, then it will lie in your electronic credit ledger. It will be sitting in your electronic credit ledger. Then there is no expiry period. Once the amount comes in your electronic credit ledger within time, then you can utilize it for any number of years. No problem at all. Okay. Now we have another ledger called as electronic cash ledger. The electronic cash ledger will deposit all the will reflect all the deposits made in cash. So whatever deposits you're making from your bank in cash here means cash and bank. So any payment what you're making through online modes or through payment at the counter, all of that will get added in your electronic cash ledger. Also, the any TDS or TCS is equivalent to money deducted. So these amounts of TDS and TCS made on account of the taxpayer will be added to your electronic cash ledger. The information will be reflected on real-time basis. That is, once you go to the bank and make payment or online you file your make payment, it will appear immediately on your electronic cash ledger. This ledger can be used for making any payment on account of GST. Electronic tax credit ledger, ITC ledger, which is also called as ITC ledger. Input tax credit ledger had restriction that you can utilize only for payment of tax. And cash ledger, there is no restriction. It can be used for making any payment, which means apart from tax, what will you pay? You'll pay interest, you'll pay penalty, any late filing fees. All of that can be utilized from your electronic cash ledger. But credit ledger has a limited restriction that it can be used for only payment of tax and nothing else. GSTR1 filed by the supplier, automatically GSTR2 generated? Yes. Based on GSTR1, GSTR2B automatically gets generated. Otherwise, then there will be multiple things, right? You will raise an invoice and you have to then follow with the customer, things like that. No. So once you file your GSTR1, it will automatically appear in the recipient's portal. Actually, we have 2 points related to input tax credit, say 30th November or annual return, but 18.2 and 18.4 circumstances, they in 1 year. Yeah, so for 18.1 and 18.2, that's fine. But we are talking on a normal credit. So 18.2 and 18.4 says that if there is a new business, if there is a new business or a business with new transaction, then this will apply there. Okay, so now we understood there are three ledgers: tax liability register, electronic tax credit register, which is also called as electronic credit ledger, and one more thing is called as electronic cash ledger. So there'll be a maintenance of taxpayer-wise electronic ledgers. So ledgers what appears in my portal will be different from the ledgers which appear in somebody else's portal, because based on my amounts, it will appear in my electronic ledgers, and for him, it will appear in his portal based on his transaction. Details in this ledgers will get auto-populated from the returns file majorly. In cash ledger, it will be based on the details from the paid Chalan. So once I make the payment, it will get added to the electronic cash ledger. And for any kind of credit, it will get credited or it will get added in the liability based on the returns what I file. Both the ITC ledgers and cash ledger will be utilized by the taxpayer for discharging tax liability and other liabilities arising of demand, appeals, and orders. So apart from utilizing the cash and credit for making payment for the returns, this will also be utilized for making payment of taxes based on the demands or appeals. And okay, these ledgers will be updated in real time on an activity action by the taxpayer in connection with these ledgers. So once you file your 3B, your electronic credit ledger, electronic liability register gets updated. Once you make payment in your bank, your electronic cash ledger gets updated. Once a return is filed, this offset gets completed. That is also all happening on a real-time basis. Okay. Then the balance, if any, in the cash or credit ledger may be refunded. Okay. There are certain specific conditions. So if you fulfill those conditions, the amount which is liable sitting in your electronic cash ledger and electronic credit ledger can be refunded. So I made a payment of tax, sir. Now I have made the payment. I've closed down the business now. Can I claim the refund of the cash ledger? Yes, cash ledger you can claim, but take a reverse scenario where lot of purchases you have made and there was no sale. So what will happen? Lot of amount gets added up in your electronic credit ledger. So once the amounts get accumulated in your credit ledger and there is no sale, will you get refund of amount in electronic credit ledger? I'll repeat the question that I have a lot of purchases and I don't have sale. So what happens? A lot of purchases on which I paid the taxes, it will get added in my electronic credit ledger, and I don't have any cash liability or the liability on my returns. So it will not get offset. So the amount is getting added up month on month and sitting in my electronic credit ledger. So can I utilize this electronic credit ledger? Can I claim a refund of this? No refund. Correct. Everybody is giving correct answer. You have understood the input tax chapter very well. So there is no refund mechanism of the amount sitting in the electronic credit ledger. You can only claim the refund in your electronic credit ledger in two circumstances: when there is a supply which is a zero rated supply. And you know what is zero rated supply? Zero rate supply is a supply when you make a supply, to a SEZ unit, or when you make an export. Okay, so only in first thing is a zero rated supply. In second instance is when you will have your it is called as inverted duty structure, when your inputs are chargeable at higher rate and your outputs are chargeable at lower rate. So inputs are at 18%, you do some processing and you come up with a, and this product is at 5%. Then the department will give you a refund under the mechanism of inverted duty structure. Matlab, the tax structure is reversed. Generally, your input tax should be less and your output should be high. But in certain circumstances, your input, okay, could be of a higher tax percentage. So your input will be high and your output will be less. In that cases, you can claim the refund. Is the voice clear now? What is the problem with the voice? Is it fine now? Okay, so what I was saying is that the amount in your electronic credit ledger can be claimed only in case of a inverted duty structure, when your inward is at higher rate and your outward is at lower rate. So in that case, you can still claim a refund. So refund is possible in two cases. One, you have a supply, zero rated supply, and second is in case of an inverted duty structure. The amount collected as CGST and SGST shall stand reduced to that extent. Means, yeah. So when you file a refund, okay, you have your credits and you are made export of services, which is a zero rated supply. Now you have applied for refund. So balance, if any, in the cash or credit ledger may be refunded in accordance with the provisions of the Act and rules, and the amount collected as CGST and SGST shall stand reduced to that extent, which means that when I am claiming credit of this, there will be a reduction in my electronic credit ledger. Why? Because when you make an application for refund of this, you are saying that give me refund of this credit ledger. So then, of course, to that extent, credit ledger it has to get reduced. Correct? There can't be duplication that you claim refund also can utilize the input tax credit also. Correct? That be duplication, which is unfair. So when you apply for refund, the amount in electronic credit ledger will get reduced to the extent of your refund claim. Once you get the refund, then you've got the money. But if there is a rejection of some amount of the refund, then to that extent of rejection, it will get added back to your electronic credit ledger. So what I'm trying to say is the refund mechanism works that when you apply for refund, you are exchanging your credit and getting cash, correct? So your credit has to get reduced to that extent when you apply for refund, and you will get the cash as a refund. Inverted duty structure means that is what I'm trying to explain, that when your input is at a higher rate than your output, your input is at 18% and your output is say at 12% or at 5%. There is a mismatch, right? This your input should be less, then you can utilize fully and make an output. But in certain circumstances, like agarbatti products, your inputs are all at 18%. You'll buy the stick, you'll buy the essence, okay? All the raw materials, what is required, you'll buy, which is at 18%, and your output of agarbatti is at 5%. So what will happen? Your credits get accumulated and your output is limited. So you can claim the refund of this under this inverted duty structure concept. United Nation or embassy got refund. Yeah. So when they get refund, then also that whatever credit is getting accumulated, to that extent, the credit has to get reversed and they will get refund. So multiple examples are there, but refund of electronic credit ledger is possible only in case of two instances where there is a zero rated supply or inverted rated supply in case of refund of electronic credit ledger. But a refund of electronic cash ledger, you can do it anytime without any condition, because that is the like a bank account, as we said. You make payment and you can claim the refund of that. Moving forward, how the payment of tax works, what happens if you make payment of tax in your electronic cash ledger, the payments which are made through various modes, okay, and the TDS and TCS, whatever payments you make gets added in your electronic cash ledger, right? So these are all the additions. So all the payments made through various payment modes, we'll understand what are the various modes. So all those payments gets added up, and the TDS and TCS what is deducted also gets added in your electronic cash ledger, because these are all equal to your cash amount itself. The party, instead of making payment to you, had made payment in your electronic cash ledger. So all these payments gets added up, and this is your credit in your electronic cash ledger. And the debits is all the payments of taxes what we do, payments of tax, interest, penalty, fees, or any other amount. All of this gets reduced from your electronic cash ledger. Okay. And electronic credit ledger, what we have, whatever is the input tax credit on self-assessment, what we claim in our 3B is our electronic credit ledger. And debits is payment of our output tax. So under this law or IGST. So whatever credits you utilize for payment of tax gets reduced from your electronic credit ledger. So this is the addition and this is the reduction in your electronic credit ledger. And cash ledger, all payments, and reduction is any kind of payments what we make. The amount collected as CGST and SGST still stand reduced to that extent. वो तो समझा दिया है. Any other doubts till now? Inverted duty structure also. No other questions? Okay. So inverted duty structure, it is not there for your syllabus, but since you have interest, let's understand this. I have take an example of a agarbatti manufacturer. He purchases the incense sticks, okay, and he purchases the perfumes and the materials which is required. All of this, the input what he's purchased was for 10,000 rupees. Let's take a simple example. On 10,000 rupees, the suppliers charged him at 18%, which means 10,000 rupees what he purchased on that 18% is 1,800. Now he sold this agarbatti for a with margin, right? Now 10,000 rupees is his input cost. Now on this 10,000 rupees, 18% ITC is 1,800. Now he sold his agarbattis. He will not sell at 10,000, right? He will add his margin. Say 2,000 rupees is his margin. 12,000 rupees. On this, it is at 5%. So on 12,000 at 5% is 600 rupees. So he will pay this liability of 600 through his electronic credit ledger because he has sufficient balance of 1,800. He has paid 1,800 use कर दिया, 600 pay कर दिया. Balance is 1,200. What happens to this balance 1,200? Because every time it will be a balance to him because his input is more than the output. So he will claim credit at 1,800. जिसमें से he is utilized 12,000 into 5%, which is 600. So the balance of 1,200, he can claim refund by justifying that his input rate on input is more than the rate on output. So this is called as inverted duty structure. Clear, Nishala and Hemlata, how electronic credit ledger works? Explain TDS and TCS in cash ledger. So what happens in TDS and TCS? We have just explained that the tax what is deducted from the by the government, which is the GST TDS that gets added to your electronic cash ledger, and whatever is the TCS deducted by the e-commerce operator, that also gets added in my electronic cash ledger. So apart from you making payment, the only case where it amount gets added in your electronic cash ledger is when the TDS and TCS is getting deducted. When he claims the credit, is there any time limit for the same? No. Once he claims the credit, he can keep it. Okay. Now, electronic cash ledger, What is the electronic? We'll understand these ledgers in detail. Electronic cash ledger, it is a summary of all the deposits or payments made by a taxpayer and treat it like a bank account with the government. Date of credit in this electronic cash ledger is on receipt of a CIN, which is a Chalan identification number from the collecting bank, which means when you make online payment, you have to get a CIN. When you make offline payment also, when you go to the bank and make a payment, then also a CIN should get generated. Once the CIN gets generated, that is the confirmation that the amount is sitting in your electronic cash ledger. So once a CIN is generated, the amount is credited, and the date of credit in the treasury of state government or central government is deemed to be the date of debit. So credit is receipt of CIN, and debit is when there's a credit in the treasury of the bank of the state government. So when will that happen? When you file your returns. So once you file your returns, that is the date of debit, and not the actual date of deposit of amount in the electronic cash ledger. That is the date of debit. So electronic cash ledger credit is once you make the payment, and debit is once you file the return and the amount gets into the treasury of the state government. State government in case of SGST, and central government in case of IGST and CGST. Okay. Now, what are the features of payment of tax? First is it is electronically generated channel. Whatever payment you make, there has to be a electronically generated challan from the GST and common portal itself. Not like our TDS payments when we can download it from the portal, download it from any website or from the income tax website, fill it up manually and make the payment. There is no such requirement or no such feature at all. You cannot have a hard copy of a challan, fill it up and give it to the department or give it to the banker. That's not possible. It is an electronically generated challan. You will have to mention the details and the challan gets generated, and you have to make the payment then. So even if you have to make a manual payment, you have to go to the portal, go to your GST login and mention the amount what you want to make the payment, select the mode of payment. And if you select that you want to make it through a cash at a bank, you select it, then a challan gets generated that you have to give it to the banker. Once he makes a entry, then he will give you a CIN number. That is when payment will happen. For online transaction, you generate a challan, make the payment, then a challan gets generated. That is when payment is completed. Then facilitation for the taxpayer. The other feature is it is a facilitation for the taxpayer by providing hassle-free anytime, anywhere mode of payment. Even online, you can make payment anytime, anywhere, or you can make it through a bank. Convenience of making payment online. Logical tax collection data in electronic format. Faster remittance, so you don't have to go to always to a banker. They will take 2 to 3 days sometimes. So all of that hassle is reduced. Paperless, because it is online, so it is paperless. Speedy accounting and reporting from the government's perspective. Electronic reconciliation of all the receipts because all the data is available electronically, and simplified procedure for banks. So they don't have to check whether your challan is correct or no, whether it's a correct number. It will be generated from the portal. So once you're registered, all your records are available. From the records only, your correct GST number only will get auto-populated. And it provides a warehouse of all digital challans. Whatever payments you have made is available in one click. All the challans will be available. Please repeat electronic cash ledger. Okay, cash ledger. This part is what is the credit in the cash ledger and debit in the cash ledger. So basically this credit is what we were explaining. Okay, this is the credit and this is the debit. Okay, so the credit happens when you receive a CIN, when you receive a challan identification number. That is when the amount gets credited in the electronic cash ledger. And then when is the debit? Is when the amount is credited into the government's account. When it is a debit from your end, it has to be credited to somebody else, right? Double entry system. Credit has to have a corresponding debit So when is your debit possible is when there is a credit in the government's treasury account. Okay. So when there is a credit in the treasury of the state government, it is deemed to be a date of debit. Okay. Moving forward, what are the legal provisions? Payments is to be made for any intrastate supply. We know this, just to recapitulate, that any payment for any intrastate supply, tax to be paid is CGST and SGST. For any interstate supply, tax to be paid is IGST. In certain categories of registered persons will be required to pay to the government TDS and TCS. In addition, interest, penalty, fees, and any other payments are to be made. Then liability to pay GST arises when there is a supplier of goods or services. So the liability is on a supplier, and specified cases like imports and other notified suppliers where the liability will be cast on the recipient under reverse charge basis. So the liability will come when you're a supplier who's supplying goods and services, and when you're a receiver, you have received goods on which reverse charge is payable. And notified cases of intrastate supply of services, the liability to pay GST may be on an e-commerce. So supplier, receiver, and on an e-commerce. Okay, these are the three people who will be liable for GST. What are the modes of payment? As we have discussed, that what is the mode of payment in the electronic cash ledger. So we are talking only on cash ledger here now. Cash ledger, you can make payment through online. Okay, online through internet banking, or by using your credit card and debit cards also. Credit cards are for in limited states itself. Not all the states they have started. So, but internet banking, debit cards, or UPI payments, and IMPS from any bank is also possible. So this UPI and IMPS is a really recent addition. So you may have to consider it carefully. So any payment through internet banking, credit card, debit card, and UPI and IMPS. Offline mode can be through NEFT or RTGS, wherein you generate the challan and go to the banker and say that I have to do a NEFT and RTGS. That's possible for any amount. All of this is for any value of amount, but over the counter. Okay, over the counter payments can be made through authorized banks by deposits only up to 10,000 rupees per challan per tax period by cash, check, or demand draft. So it means there is a restriction on payment across the counter saying that this is my challan, you please debit from my account by giving a check. There the limit is only 10,000. So the government is preferring that you make the tax payments online itself. Make it from your internet banking, or if you want to go to a bank, through a NEFT or RTGS request. What is NEFT and RTGS? That is a new modes of payment, right? For people who have been using banking transactions, you will know that payments through NEFT and RTGS gets credited, unlike a check. You give a check that gets cleared on the first, second, or the third day. But NEFT and RTGS, instantly the amount gets credited to the recipient's bank account. The date of credit to the account of appropriate government shall be deemed to be the date of deposit in the authorized bank and not the date of presentation. So if you give a check in the third case of OTC, the date of check, they'll give you a chapa on the challan and give it to you. But that's not sufficient. The date of presentation of this check is not relevant. When the amount gets credited to the government account, you get a CIN number at that point of time. That is the date of payment and not the payment when you make a physical payment to the bank. Difference between RTGS and NEFT. NEFT has a limitation of up to 2 lakh rupees. RTGS can be done for a value above 2 lakh rupees. For every transaction, should there be a separate SIN? Yes, for every transaction, there has to be a separate SIN. OTC limit, we said there is a limit of 10,000 rupees, but there is an exception to that, wherein OTC limit of 10,000 will not apply, which means for higher amount also you can make a payment when in the following instances. when there is a deposit to be made by government departments. Now, the government departments has to make a payment for them. They can make a higher amount also. That limit of 10,000 will not apply. When the proper officer or any other officer, which means a person who is authorized to do a act, he is called as a proper officer. Okay, not all the officers of the department are proper officer. For each task, okay, the government has given a notification saying that who is a proper officer for what act. Okay, like for registration, the proper officer is different. For collection of taxes, the proper officer is different. For scrutinizing the returns, the proper officer is different. For collecting taxes, for doing any kind of investigation, whether you are paying correctly or no, right? It is called as a adjudication. That adjudication procedure, that officer is different. So each officer is different. So the proper officer who is proper officer assigned for that duty, proper officer or any other officer authorized to recover outstanding dues from any person. So if there is any outstanding dues, if there's a person, officer who is authorized, that proper officer, whether including recovery made through attachment, proceedings, or sale of immovable property. So when that proper officer approaches and there is some recovery that you have not paid your taxes, you have to make the payment and we have to recover the taxes. There, if he says, no, I don't have any amount in the bank account, okay, you have cash, then you can make payment of the OTC. Then the proper officer, when he's doing a recovery, only in such case, the OTC limit of 10,000 will not apply. He can make over-the-counter payment of cash for a higher amount. He can make a payment of check, say he is not having an online option, but he has still amount in his bank, but I have a check. So you can pay a check of 50,000 rupees, 5 lakh rupees, and still make the payment of tax. So in normal circumstances, you can't do that. But when there is a recovery case and the proper officer has come and he wants to recover the tax, then it can be possible that he will give an authorization that you accepted, and only then it will be possible. Third instance is proper officer or any other officer authorized for the amounts collected by way of cash, check, or demand draft during any investigation or enforcement. Okay, so there are two different things. One is both, in this case, it's proper officer, but in this case, it is by a registered or unregistered person for recovery made through attachment proceedings. And in this case, it is a case of any kind of investigation or enforcement activity. What is the difference? That you have to pay some taxes, the officer knows, and he comes for recovery. Here, there is an investigation which is carried out and some amount has to be paid to the government because the investigation is not concluded and the taxpayer may run away. In such cases, they will tell to make the payment of tax. So investigation or enforcement is different and recovery is different. Okay. And the fourth instance is when the deposit is to be made by persons notified by the commissioner. So in special circumstances, if the commissioner notifies, then it's possible. Okay. So 4 instances when the deposit is to be made by the government departments. Second is when the proper officer has come to a person, whether registered or unregistered, for recovery cases. In third cases, proper officer when has come to only with a registered person in case of an investigation or enforcement activity or any ad hoc deposit which has to be made. And fourth is when the commissioner notifies certain cases. There, the over-the-counter limit of 10,000 will not apply. It can go beyond 10,000 also. Chalan. What is a chalan? A electronically generated chalan, which electronically generated document from the GST and GST network for all the three modes of payment. Okay, it contains a 14-digit common portal identification number that's called as a CPIN. Who can generate the chalan? The taxpayer can generate the chalan. When I log into my portal, I can generate the chalan, or I assign a authorized representative. If I authorize a authorized representative through the portal, right, and then that authorized person can generate the chalan. Not a authorized person who's just, I'll sign and tell that he's authorization. No, on the portal, I have to authorize him. Then he can get access to my GST and minimum details. Like for generating a chalan, there is no harm. So he can generate a chalan. Department officer also can generate the chalan. That is in case of an enforcement activity. or any other person paying on behalf of the taxpayer. That is when case of an auction or recovery by state authorities. In such case, a third party also can generate the challan. The certain key details of the challan are like name, address, email address, GSTN of the taxpayer will be auto-populated. Ad hoc deposit means it's a not a kind of calculated amount. It's a random amount, saying that the officer has come for investigation and he's saying that the liability will be based on the estimation. It will be that you have to pay 5 crore rupees. Okay, so he will tell that deposition, right? So ad hoc means a random amount based on the estimation of the officer, what payment has to be made. That is a ad hoc amount. CIN number only if credit in government bank, any bank. For any bank CIN, you will get it. Per tax period means for each tax period. So if you're a monthly filer, each month is a separate thing. For each, that's called each tax period. Single charan for payment of all types of taxes. So when you have a sales interstate transaction, you have multiple transactions. So then you have to pay CGST, SGST, and you have to pay IGST also, right? So one challan is sufficient for all the three types of payments, but not that you can include all in one column. You should have specific columns and specific amounts. The amounts, what you mention in CGST, you have to mention it correctly. What amount you're mentioning in SGST, you have to mention it correctly. Because utilization of CGST against SGST is not possible, right? So you have to mention the amounts, what you want to make the payment correctly. Fine. And any amount of IGST also, you have to make it correctly. Because if it's an interstate transaction, you'll have to pay IGST, you have to mention the amount correctly in the challan. Validity period of a challan is 15 days, which means once you generate a challan, you have to make the payment within 15 days, otherwise the challan gets expired. Then you have to generate a new challan for making the payment. Right? The challan gets generated, then the payment happens. Challan would not have a jurisdictional locational code. So for which location you're making payment, nothing of that sort. Based on your GSTI number, you will generate a challan. Tax authorities would send the taxpayers updated master data to GSTN as well as to accounting authorities. So once you make the payment, the tax authorities would send the taxpayers updated master data to GSTN as well as to accounting authorities. So if you are moving from within the state and you're moving from one place to another place, that's why we apply for amendment of registration. Core fields, non-core fields will decide it, right? So that's why core fields, the officer will authorize, so that then each department under the state government's department, there are various jurisdictions. So which jurisdiction collects what taxes will be known by this data, what is there mapped to the GSTN number. Then accounting authorities will use the data for mapping, saying that this location within a big city, which location is paying more taxes. For any statistical reasons they need to know, they will use it. Then unregistered person or a casual taxable person or in non-resident taxable person, we said that before registration, they have to make the payment, right? Or unregistered person who is found that you have to make payment of taxes, how will they pay? They will pay on the basis of temporary identification number. They do not have a GSTIN, but they will be assigned a temporary identification number. Based on the temporary identification number, they will pay the taxes. Okay. What are the basic features payment process? Challan can be edited before finalization. So if you are creating a challan and you have entered the details, you can edit it before finalizing it. Once you have finalized and CPN is generated, then you cannot make any changes. Okay, you have to mention all the details while generating a challan. After you have mentioned the details, you can generate a challan and then make the payment. Okay. Now, if I've generated challan and I've not made the payment, what will happen? That will get expired. Nothing will happen. Okay. What is the time of payment? The time can be made anytime from midnight till the next day till 20 hours, which is till 8 hours. You can make the payment. 8 o'clock, you can make the payment. System of electronic cash ledger on GST for each taxpayer. SIN gets generated on successful payment. And if SIN does not get generated, then the person will make a representation through the portal in PMT07. Okay. So if you have generated Chalan, amount is got debited from your bank account, don't worry. You can make a representation through the portal saying that amount has been debited, but Chalan is not get generated. Then the portal will have backend support team. They will check it. Okay, if SIN does not get generated, the person may make a representation. If SIN is getting generated, SIN number itself will be reference for everything, no problem. But SIN doesn't get generated, but payment has gone from your bank account, then you have to make a representation and you will get a valid Chalan for that. But there is this new amendment saying that if the bank fails to communicate Chalan details, right, you have made the payment and bank somehow through a technical reason has not communicated the details through the GST network, then the details, the electronic cash ledger may be updated on the basis of e-scroll of the RBI, which means whatever transactions you have made will get updated on the e-scroll of the RBI. Based on that e-scroll of RBI and your payment that will get matched, and the details of the Chalan is generated. The Chalan is called as PMT06. That is what will get generated. Date of credit in state government is deemed to be the date of debit in electronic cash ledger and not the date of credit in electronic cash ledger, same like a bank account. Any questions till now? Okay. We'll take a break of 10 minutes here and we'll proceed further. Just take a break of 10 minutes. फिर ये जो मैं आपको शेयर करता हूँ स्क्रीन. हाँ हाँ, ब्रेक में है ना. ब्रेक ब्रेक है. Okay. So the question, Mansi Sharma, you have is confused about the validity period of 15 days and 20 hours for Chalan. Okay. So the 20 hours means 8 p.m. basically, right? So you can make payment between midnight to the next 8 o'clock, 8 p.m. So from 8 p.m. to 12 p.m., basically, you cannot make the payment. That is what the time of payment says. And the 15 days limit says that once you have generated a challan, it will be in the portal for 15 days. After that, it will vanish off. Okay. So once it is there in the portal, you can make any day payment up to 8 p.m. So that is 8 p.m. And the other thing is for 15 days, which is different. Challan acknowledgement number, this challan identification number, what you get, that itself is acknowledgement that gets added to your electronic cash ledger. So once a CIN is generated, that is your acknowledgement. So CPIN, CIN, BRN, EFTB, all those cases in case of challan mode of payment, right? Yes. So we will read through that in detail, Manish, that what are these terms and what is it relevant. Now, utilization of IGST is, there are major heads, right? First is CGST, SGST, IGST, and CIS. So earlier, the amount available under major and minor head has to be correct. We could not utilize offsetted, but now, say, however, from 1st January 2020 through PMT09, we can transfer it, right? Like while making payment, I had to make CGST payment, but it's mentioned under SGST. So through PMT09, we can do inter-head transfer, that is under major heads, and under minor heads also, you will have minor heads of, so major heads is the taxes, and under that, you have to select whether you're making payment of tax, interest, penalty, fees, or any other payments. Because earlier, there was very strict condition that whatever tax payment is made under a major head has to be utilized for that purpose only. Now they've been liberal that you still have to make payment on the correct head, because if you made a wrong thing, then you have to make an application in PMT09 and the head gets transferred. Okay, because it's all taxes at the end of the day, but then there'll be another hassle for you to make a correction and make the payment under correct head. So make the payment under correct head. In case if there is any payment, then you can do a cross transfer. So major heads are CGST, SGST, IGST says. Minor heads are tax, interest, penalty, fees, and any other amounts. Okay. Transfer of amount in electronic cash ledger, how it happens? Person can transfer an amount from one major head or minor head to another major head or minor head in the electronic cash ledger and transfer any amount available. First is in your registration, you can do it, right? In your registration, you can do it. And you can transfer any amount available in your electronic cash ledger to the electronic cash ledger for IGST or CGST of a distinct person. Okay, so you cannot transfer for CGST. You cannot transfer for SGST because that's a state government. So transfer of an amount available in your cash ledger, you can make a payment to your distinct person, which means under the same PAN, you have multiple registrations. We know we have discussed this in detail at various chapters. A distinct person, we know the concept. So any amount, if there is a shortage in making payment of a distinct person, you can transfer it through this PMT09. So PMT09, you can do two things: transfer, inter-head transfer, major heads, intra-head transfers, that is minor heads, and then transfer from your account to the account of another person who is a distinct person. That is also possible. But provided there should not be any unpaid liability in your electronic liability register. So all your dues should get cleared, not that you are so generous that your liability you have not paid and you're transferring the balance in your cash ledger to your distinct person. You can't be so generous. You have to clear off your liability. आपका liability clear होगा, फिर दूसरों का liability clear कर सकते. E-scroll of RBI is a system, Hemlata, wherein they say it's a RBI term, so they've not explained in detail. It's basically a system which says that tabbing of whatever payments is being made, it gets recorded in a system that is called a e-scroll system. Have a doubt in cash ledger, we get interest on TDS in income tax. Likewise, we get interest on excess amount paid in cash ledger. No, you don't get that. The logic of what is there as interest in income tax applies only there. We will not get any interest on whatever amount is there in your interest in your electronic cash ledger or in your electronic credit ledger. No interest. The only thing when we get the interest on in GST is when we have to pay late, we pay interest. And if the refund, we have discussed the provisions of refund, right? So when the officer has sanctioned a refund, he will give an order. Now, if that refund is delayed, then we will get an interest, not on the balance in cash ledger and credit ledger. Once a refund has been sanctioned, they have a time limit of 60 days to give you a refund. So if they have not given the refund within 16 days, then they will have to pay you interest, not in any other cases. GST payment of taxes by the normal taxpayer on monthly basis by the 20th of the succeeding month. Cash payments will be first deposit in the cash ledger and the taxpayer shall debit the ledger for making payment in the monthly returns. Payment can also be debited from the credit ledger, like for making payment of your liability, you can use credit ledger or cash ledger. Payment of taxes, like for the month of March, should be paid by the 20th of April. So 20th of the succeeding month is when you will make the payment. Composition taxpayers will do a quarterly payment, right? So that's the payment basis. What are the various terms which somebody was asking? CPIN is Common Portal Identification Number. This is 14-digit unique number, which is valid for 15 days. That once you enter the details, you'll get a CPIN. Then after making a payment, you'll get a Chalan identification number, which is a 17-digit unique number, 3-digit bank code plus 14-digit CPIN. So from CPIN, you will get CIN. And CIN is generated by authorized bank or the RBI when payment is actually received and credited to the government account. BRN is a bank reference number, which is a transaction number given by the bank for payment against a Chalan. Okay, so these are the terms related to Chalan, but for us, only CIN is relevant. FPB is electronic focus point branch, because internally the banker has to assign one branch which will make the payment. So it will each bank, when we make payment from a bank, we can't go to our branch and say that I've made payment of GST. There's a conflict. It will all get selected at one electronic focal point branch, wherein branches of authorized bank are authorized to collect the GST payment. Okay. Each bank will nominate one branch as its EFPB for all India transaction. The EFPB will be having an open account for each major heads for all governments. For NEFT, RTGS, RBI will act as a EFPB, because when you're making a NEFT and RTGS, it goes to the RBI directly. Okay, so those are the terms. Now, what happens for the workflow of payment? GST will direct the taxpayer to the website once you log in, go on Chalan, generate the Chalan. Now you're ready to make the payment. So when you're ready to make the payment, the taxpayer will be directed to the portal. So like how we make any online payment, you go to the payment Chalan. From there, you select electronic payment. Okay. Electronic payment. It will take you through your any kind of a online transaction. It will go to your bank website. From there, you make the transactions, and then your amount gets credited to your electronic cash ledger. Alongside, GST will forward an electronic string to the selected bank carrying specified details of Chalan on real-time basis. So it happens real-time online basis. Then the taxpayer will make payment using user ID and password. On successful completion, EFPB of the bank, because that's a focal bank point, right? They will forward a confirmation string in form of CIN to GST on real-time basis. So it'll all happen at the back end that we will not be realizing that so much things are happened, but actually so much of background work has happened. And GST will credit the amount into a taxpayer's cash ledger. Copy of the paid Chalan is to be made available on GST for taxpayer, which can be downloaded and printed. So GST, taxpayer will approach the GST, generate CPIN number, choose payment or option as net banking or credit card or debit card, make payment, then EFPB will generate the CIN and inform the GSTN, and in the GSTN credit taxpayer's ledger. So this is the flow, how it will work. Clear? The GST first approach the GST. From here, everything happens from the GST side. They will generate the CPIN. Then from CPIN, choose payment option will come. You make the payment. Then it comes to the EFPB and then comes back to the GST where a Chalan gets generated and the amount gets added to the electronic cash ledger of the taxpayer. Yeah, this is the flow. What are the rules for utilization of amount? Yeah, how you can utilize the amount. The amount available in the cash ledger can be utilized. Again, we have explaining this for tax, interest, penalty, fees, or any other amount. And the amount available in electronic credit ledger may be utilized for making payment of tax or credit ledger cannot be, and credit ledger, important. This is important. The credit ledger can be used for making payment of tax, but reverse charge also is a tax, right? So we cannot use the credit ledger for making payment of the reverse charge tax. You have to use the cash ledger itself. You cannot use the credit ledger. You have so much of credit balance and you have a reverse charge liability. You cannot utilize the balance in your electronic credit ledger for making payment of tax under reverse charge mechanism. This you have to be clear, because credit ledger can be utilized only for payment of output tax. You cannot make RCM payment by using your electronic credit ledger. Then electronic input tax credit ledger, or the electronic credit ledger full name is electronic input tax credit ledger, and or the electronic credit ledger. What it says, ITC as self-assessed and mentioned in the monthly return is credited to your electronic credit ledger. This can be utilized only towards payment of tax. Okay, tax here means any tax. It means only output tax. Then the tax under RCM cannot be paid under electronic credit ledger, but the RCM once paid gets credited to your electronic credit ledger because it is a credit. Instead of the vendor paying it, you have paid it to the government. And once you make the payment, it comes to your credit. Okay. So the tax on your electronic cash ledger can be utilized for payment of only output tax. RCM has to be paid through your cash. Okay. The electronic, whatever payment you make through your cash for your RCM, you'll have to make a cash payment first, and then that amount is a credit. So that amount gets added to your electronic credit ledger. So there's a dual exercise, yes, but the system is like that because once you make the payment, cash account gets triggered, and then you make a liability payment. From cash will go up, then on the liability it comes down, then it gets added to your electronic credit ledger. Now, electronic credit ledger can be utilized only towards output tax. Output tax means the tax payable, that is the tax chargeable under this act, or the taxable supply of goods or services are both made by him or his agent, but excludes the tax payable by him on reverse charge basis. Okay. ITC utilization rules says that the IGST credit, okay, IGST credit can be used to set off the IGST liability. This is important. The IGST credit can be used to set off the IGST liability. IGST credit, if available, to set off CGST liability, if any. First, this is the order of utilization of credit. The IGST credit first utilized towards your IGST liability. Then, if there is still any credit, you can utilize to offset CGST, or you can utilize to offset SGST in any proportion and for any value. Then CGST credit you have. The CGST credit you can utilize to set off your CGST liability, and the CGST credit, if available, to set off IGST liability, if any. Okay. And then SGST credit utilized for setting off SGST liability. If there's any balance, you can offset for any IGST liability. Okay. No cross utilization of credit between CGST and SGST. Central and state do not work together. If you have credit of CGST, I can make payment of SGST liability. No. Similarly, if you have so much of SGST credit, can you utilize for making payment of CGST? No. But CGST can be utilized for making payment of IGST. Similarly, SGST balance you can utilize for making payment of IGST, but not C and S. Let's understand this with a clear example. You have IGST credit balance. Okay. This IGST credit balance, please utilize this for your IGST liability. Okay. So to fully utilize the IGST credit first. Then you can utilize the IGST credit for making payment of CGST or SGST in any proportion. Okay. This diagram will definitely help you to see how the credit flow works. If you have IGST credit, utilize for IGST first and then CGST and SGST liability. Second, you have CGST credit. This CGST credit first utilize with your CGST liability. Like with like, IGST credit will be with the IGST liability. CGST credit utilize with CGST liability. If there is any input tax credit still remaining, then utilize for payment of IGST. Okay, CGST utilize with CGST, then with IGST. SGST credit, whatever you have, utilize with for payment of SGST. Then if there's any balance, utilize that for payment of any of the IGST liability. Here, this is how the credit mechanism works. What is the purpose of RCM? Because in many cases, we only show it as an outward liability and claim credit for the same. No information goes to the department. When you file your return, then the information goes to the department. So it's not that only in your books you show it. You will have to show it in your return, and that information goes to the department definitely. Because the department will see all your reverse charge mechanisms, whatever you have, and if you have not paid it, they will demand liability on that. So you will have to specifically mention it in your monthly returns. So is it possible to transfer an amount available in cash ledger of SGST to CGST of distinct person, or amount in cess to CGST? See, you can't do it directly, but indirectly you can do it, right? Because you have option of major head adjustment. So if you have any balance in your SGST, you can transfer it to the CGST. Then you have balance in your CGST now, you can transfer it to your distinct person as CGST. So two-way process, but not a single thing what you can do. Just one. Sorry. So you have understood this credit flow, right? Yeah. Explain in case of credit for RCM, who will get the credit? So in reverse charge, if I have paid the reverse charge, I will get the credit. So reverse charge, the case simple that reverse charge credit will be received by the person who pays it. So if the liability of reverse charge is on me, I will pay it, and the credit also will obviously come to me. GST PMT Aisha is a form. So PMT 0607, what we say is a form number which is given by the department. Like GSTR is the return, right? The nomenclature is GSTR. So we can understand that it's a GSTR return, GST return, but there's no need of nomenclature. The term, it's a term is of a form name. That's the name of the form. SGST credit will be utilized towards payment of IGST. Only then credit of CGST is fully utilized. Not that way. You can do it in any option. So first is utilize your IGST completely for your IGST liability. So if you have a IGST liability, you cannot utilize the CGST first for making payment of IGST. If you have to make payment of IGST, the credits of IGST has to get completely exhausted. You have to empty off the bucket which has having the IGST credit. So once you empty off this credit of IGST, then you can utilize payment of IGST. Then if there is, after emptying the bucket of IGST, there is still liability of IGST, you can make payment through CGST or SGST. Okay, that's how you have to utilize. What are the both common points for electronic cash ledger and credit ledger? Where a refund is claimed, okay, then the refund amount needs to be debited to the extent of refund claim. So if you are claiming refund of your electronic credit ledger, so credit balance is there, you're claiming refund, then you have to debit to the extent of refund claim. And once refund gets credited to you, that's fine. But if the refund gets rejected, then your electronic credit ledger has to come back to that extent. So when you apply for refund, you have debited it. If you have got the refund, well and good, you have got it in bank account. But if your refund is getting rejected, then it should get recredited. Or take a scenario where you have applied for a refund of 1 crore rupees. Okay. 20,000 officer is saying, I will not allow, I will review a refund of 80 lakhs. Partial refund also, they can approve it. So they're saying that there is some issue with that 20 lakh rupees, your credit is incorrect. So they will give you a credit in your bank account to the extent of 80 lakhs. To the extent of 20 lakhs, they cannot say it's gone. It has to come back to your electronic credit ledger. So that 20 lakhs will come back to your electronic credit ledger. Okay. Restriction of utilization of ITC. This we have read in the chapter of ITC, but just for reference, we'll mention it again here. Where the commissioner or an officer who is a senior officer, not below the rank of an assistant commissioner, who is authorized, is empowered to impose restriction of utilization of ITC. So your ITC can get restricted, okay, to impose restriction on utilization of ITC available in the electronic credit ledger if he has reasons to believe that you have claimed the ITC fraudulently, then he can block your credit. So 86A says that your credit can get blocked in the following circumstances where the ITC has been availed fraudulently, when the supplier is not existing or he is not conducting the business, or you have received the credit without actual receipt of goods, because ITC condition says that you have to actually receive the goods, but you have not received the goods and you have got the credit, so it's fraudulent, or the tax in relation to which has not been paid to the government, that you have got the credit, but the supplier has not made the payment. In that case, your credit can get blocked. And the registered person availing ITC is not in possession of the tax invoice. So in all these circumstances, your credit can get blocked. Such restrictions, whatever has been imposed under 86A, you cannot utilize your credit. So all payments of your taxes has to be paid through cash. Now this restriction will be there for only 1 year. After 1 year, it will get removed. Okay. So before that it has to be removed, then you can make an application, you can get removed. But if you don't do anything and the officer doesn't accept your request, then the restriction can be for 1 year. After that, it will get removed. And then we have that 86B, we have understood that, right? 86B says that where 1% of your credit has to be, and 1% of your taxes has to be paid by cash, that is 86B. What are the common pointers for electronic cash and credit ledger? Like this refund, where a person has claimed refund of any amount before from the electronic cash or credit ledger, the said amount shall be debited to the electronic cash or credit ledger. If the refund so claimed is rejected either fully or partly, the amount debited earlier to the extent of rejection shall be recredited to the electronic cash or credit ledger by the proper officer, and a unique identification number shall be generated at the common portal for each debit or credit. So any debit or credit, whatever is happening, a unique number will get generated. And similarly, a unique identification number relating to discharge of any liability shall be indicated in the corresponding entry in the electronic liability register. So every movement in your cash ledger, credit ledger, or the liability ledger will have a unique identification number for reference purpose. Electronic liability register is the one which reflects the total tax liability of the taxpayer after netting off with ITC for a particular month. So output minus input will be your net liability, which will appear in your electronic liability register. The amount of tax, interest, penalty, or any other amounts payable as determined by the proper officer in pursuance of the proceedings. Okay, wherein apart from your returns, if there is any proceedings, because there are ample procedures under GST wherein your taxes will be rechecked. Okay, that's called as various proceedings. It starts with adjudication proceedings and goes on to appeals also. So any adjudication which the officer does, he will determine the liability. That liability also gets added to your electronic liability register. The rules shall be applicable in the following order: that what amount will come to your liability register. First is self-assessed tax and other dues related to the returns of the previous tax periods has to be first cleared. So in your liability register, what gets taken away first is if you have some cash balance, it will get utilized in the electronic liability register for any self-assessed tax and other dues, which is self-assessed tax means a tax which I am declaring in the return. So anything what I've declared in the return, that's a self-assessed tax. So this self-assessed tax will get debited first, and any other dues related to returns of the previous tax periods. Okay, whatever liability I have declared in the previous tax periods will get first deducted. Then anything to do in the current period will get deducted. Then if there is any liability, I can utilize for making payment what demand under 73 or 74. That is section 73 or section 74 are the adjudication proceedings, wherein under these two sections, the tax officer can demand liability from you. So any demand under these adjudications can happen only if my liability under the returns are being fully exhausted. Okay. So how it works is electronic credit ledger, we have debit of all our payment credit, like we're talking about credit, right? So electronic credit ledger, you have credit of your input tax credits, and electronic cash ledger, whatever payments we've made. Now this will get debited. So it is addition and then the deletion. From here, what gets deleted is payments of all the liabilities, and in electronic cash ledger, payment of all liabilities plus any other payments. In credit ledger, we saw that it is only payment of all the liabilities of taxes, debit of all the taxes. From the credit, only payment of taxes. This gets added to our electronic liability register, because amount, whatever is payable will come as a debit, and the debit from here goes as a credit in your electronic liability register. Got it? So how the flow happens, you make the payment or you get the credit, gets added to your cash ledger or credit ledger. From there, it goes to the liability register. Okay. What are the other payments from the cash ledger? TDS, TCS, RCM liability, amount payable. All of these liabilities you can make from your electronic cash ledger. 86B will be maintained on a monthly or yearly basis. 86B, is it? You're saying rule 86B? That restriction on ITC, it will be on a 1 year. It's on a yearly basis. the amount remaining in cash ledger after payment of tax can be claimed as a refund, but balance in electronic credit ledger cannot be claimed as a refund by everyone. It can be claimed only in case of that refund cases, in case of exports or inverted duty structure. In other cases, whatever is your electronic credit ledger, you're a trader, you're not doing any kind of a zero rated supply, or neither you have under inverted duty structure. Then if you have good business, you will utilize your credit ledger. If you have a business which is not making good profit and you're selling at loss, then the balance what is there in your electronic credit ledger, you will not get refund of it. Presumption on passing of tax is saying that every person who has paid the tax, this is an important presumption, that every person who has paid the tax on goods or services are both under this act shall, unless the contrary is proved by him, shall be deemed to have been passed the full incidence of such tax to the recipient of such goods or services or both. So every person who has paid the tax on the goods or services under this act, okay, shall, unless it is contrary proved, shall be deemed to have passed on the full incidence, which means that if I'm collecting the taxes, it means that I am not bearing the burden. The burden is on the receiver. So I am not the person who's paying the tax. Why this is relevant? A person who has charged tax on his invoice is presumed to have collected taxes. If he is mentioned the tax amount in the invoice, it means he is collected from the customer. So why it is relevant? So who will get the refund? Will it be the person who has raised the invoice, the supplier, or the customer? In case of refund, it will be the customer, because if you want to claim the refund, then the supplier has borne the burden. So the refund should be claimed by the customer and not by the supplier. Okay, that is the implication of this presumption. This is called as the concept of unjust enrichment, saying that you are a person who are supplying the goods, you have collected taxes from the customer, now you don't ask refund from me, right? Like, when is this applicable? In case of real estate businesses, when a real estate charges GST from his customer, the person claiming the refund will not be the real estate developer. Okay, so in case of this anti-profiteering provisions which are there under GST, the government said that you cannot do any anti-profiteering. So if you are charging more taxes, you have to give back a refund. So we said, okay, we'll give you a refund, but who will claim the refund? The ultimate home buyer. They can go and claim the refund. The builder cannot claim the refund because builder has not borne the incidence of tax. He's only collected from the customer and paid it to the government. So he cannot claim the refund. Ultimate burden is on the house buyers. They can go and claim the refund. Amount payable under Section 10 means composite supplier. Section 10 is for a composite dealer. That is Section 10. RCM payment credit, where is available in ITC or cash ledger. So once you make the payment, it is available in your electronic credit ledger. Yes, Adarsh. So even amount available in cess also came. First, I should transfer it to CGST, SGST. Then I can transfer it to CGST or AGST of distinct person. Yeah, same head, you will have to transfer it. What are the advantages of this new payment system? Because under erstwhile law, this new system was not there. It's only under GST, this new payment system has come in. What are the advantages of this new payment system? Payment can be made 24/7 online, and hence no waiting or standing at banks for payment. Very easy and convenient. Instant receipt for payments is made online. Of course, when you make at a bank, then it will take time, but otherwise online, it is instantly available. Tax consultants can make payment because we saw that payment can be made by the taxpayer or through a authorized representative. So if a tax consultant is authorized, he can make a payment. At least he can generate the challan. Single challan form, instead of duplicate or triplicate copies, you don't have to have maintain multiple copies. Earlier, for any tedious payments, even now, you have to make duplicate and triplicate copies. So in GST, just single challan is sufficient. Revenue comes earlier to government treasury, faster and swifter. It comes earlier to the government. Greater transparency, very much transparent. Online payment made after payment will be credited on the same day. Okay, so any online payment made will be happening on the same day. Offline will take 1 day. So these are the various advantages. Now we'll come to the concept of interest. Okay, so what happens if you delay your payment of taxes, right? Very simple. This is complicated but important because there could be a question saying that your tax payment was due. Now you have made a delayed payment. What happens? Interest shall be payable in case where a person fails to pay the tax or any part thereof to the government for the period for which the tax or any part thereof remains unpaid. Okay, at the rate not exceeding 18% as may be notified, which means the rate notified is 18%. You have to file your returns on a monthly basis. 20th of every month is your due date. Now, if you don't pay by the 20th, section 50 subsection 1 says that you have to make payment of the interest. At what rate? 18%. So I will show my tax liability. And if I pay by 20th, fine. If I make the payment by 30th, for the 10 days, I have to calculate interest at 18%. And this 18% interest is per annum. Okay. Per annum, I have to calculate the rate is 18%. So I have to prorate it for 10 days and then pay the interest. Now this interest, will I make payment on the full amount of my liability or part amount? That's where this is coming in, saying that interest shall be calculated from the day succeeding the day on which such tax was due to the prepaid. So on that date of 20th, you will ignore. From 21st, you will calculate. New proviso is being inserted. There's a proviso which says that to charge interest, you will pay the interest only on the net cash liability and not on the gross tax payable. Your tax liability is 1 lakh rupees. Okay. You have sufficient credit of 80,000 rupees and 20,000 you are paying through cash. So this 80 is already there with the government, no? So you don't have to pay interest on the whole 1 lakh rupees. You have to pay interest only on the 20,000 rupees. Okay, that is called the net cash liability and not on gross tax payable. So be careful that when you calculate interest, interest is payable on not on your whole liability. The interest is payable only on that aspect which is utilized from your electronic credit ledger and not on the only to the extent of utilization from the electronic cash ledger and not your credit ledger. So if you are making payment of the tax from your electronic credit ledger, no interest on that because that credit was already there with the government, right? But we have not offset it. When you file your returns, you will offset it. But to that extent, you don't have to pay interest. You have to pay interest only to the extent of your electronic cash ledger payment. Interest shall be payable in case where tax payable make an undue or excess claim. Now, if you have made an excess claim, then the interest is 24%. Wrong ITC claim, now you have reversed it. In that case, the interest rate is 24%. Interest important points are the clarification received that interest is payable on net tax and not gross. Interest is automatic and no discretion that once you delay the payment, you have to pay interest. Even the officer cannot reduce the percentage of interest or the number of days. Interest is automatic and no discretion of the officer to reduce it. In case of belated payment of tax, it must be made voluntarily, that out without any demand. In case of any objection or assessment, then interest is payable on the final order. So if you have any objections, once you get a final order, on that you have to make payment. Interest will be debited to the electronic liability register. Payment can be settled by adjustment of balance in electronic cash ledger and not electronic credit ledger, because we know that electronic credit ledger, you can use it only for payment of your taxes. Interest you can use from your electronic cash ledger. Section 51 says that every person who is liable to pay tax in accordance with the provisions of this act or the rules made thereunder, but fails to pay the tax or any part thereof within the prescribed time, shall, for a period for which tax or any part thereof remains unpaid, shall pay on his own interest at such rate not exceeding 80% as may be notified. So the government is notified at 18%. Say, let's take an example. Sale for the month is 15 lakhs. Purchases and expense for the month is 10 lakhs. So should I pay interest on the gross liability of 15 lakhs or on 10 lakhs, or what should be the interest what I should pay on? On what value should I pay interest? Normal unregistered person buy house, then he can claim refund. Yes. If it has been challenged, Pritesh, that there is a undue influence and he's charged more, right? Through due to this anti-profiteering, then the unregistered normal buyer can claim refund. So in our example on net liability, so the interest will be payable on this 5 lakh rupees, right? So the net is 5 lakh rupees. Output tax on 15 lakhs is say 2 lakh 75,000 and input tax is 1 lakh 67,000. Then what is the gross liability and what is the net liability? Gross is 2 lakh 70,000 and net is 1 lakh 3,000. You're right. So interest will be on 1 lakh 3,000. Net liability is 1 lakh 3,000 as rightly said. So the Finance Act may inserted a proviso that what does this proviso say? That the interest on tax payable in respect of supplies made during a tax period and declared in the return after the due date in accordance with the provisions, except where such return is furnished after commencement of any proceedings, shall be payable on the portion of tax that is paid by debiting the electronic cash ledger. That's where they said that you have to pay interest only on to the extent of your debit from your electronic cash ledger, except when you have to make any payment under this proceedings under 73 and 74. There you cannot say that I will utilize the credit. No, there you have to pay on your total liability itself. Apart from that, in normal returns, if there is delay, you have to pay on your net liability. Payment of tax and filing of monthly returns by a regular taxpayer is say for April 29, due date of which is on 20th May, right? Now what happens in the case one? Case one is, yeah, payment and filing is done on 18th May. Gross output tax is 10 lakhs and ITC is 7 lakhs. So what is the interest payable on? No interest. Yes. 3 lakhs. You people are saying 3 lakhs. But why 3 lakhs, madams and sirs? Is there a delay? The due date is clearly mentioned as 20th May, and you have filed it on 80th May, 18th May, which is before due date. So no interest. People who have told 3 lakhs, be careful. Okay, no interest. Second case, payment and filing for this was done on 28th August. Gross output is 10 lakhs and ITC is 7 lakhs. In that case, what will be the interest? 18% on 3 lakhs. So you'll pay 54,000 rupees interest. Interest pay on net liability. Okay, understandable. 3 lakhs. So 18% on 3 lakhs for 8 days. Sri Lakshmi, how do you get 8 days? No, nobody's getting a correct answer for this. Yes, Ramja got a correct answer. Nagraju has got a correct answer. Others? Aparna Mishra, please check your answer. Will you pay 18% on 3 lakhs? 18% is per annum. But how many days delay is it there? Yeah, 99, it's actually 100 days delay. Pritesh, 1,183, that's very less. Interest for 100 days. Yeah, right. Ajay, your answer is correct. Gaurav, 4 months. No, there's no 4 months. It has to be on based on the actual number of days. Deepak Jha, interest for 100 days. Yes. How much does it come to? No, Venisa, your answer is wrong. Aparna, you're very close. It's 100 days. If you calculate it, actually, it's 100 days. Yeah, Sri Lakshmi, you're right now. Correct. Yes. Pritesh, Harish, Hardik, everybody has given a correct answer. So the calculation is on 3 lakhs, which is net liability at 18% into 100 divided by 365, which is 14,795. How do you get 100 days? For the number of days of delay from 21st May 2019 to 28th August 2019, which is 100 days. Okay, that's how you have to calculate the interest for. Is it from May or July? It is from May because the DTA is here, right? April month's return, you have to file by 20th May. So from 21st May, you have to calculate till 28th August. Correct? Be careful, Pritesh, that shouldn't make mistakes in considering the months. It's very critical for your exams that the month and dates are very important. Yes, Venisa and Kadambari, you're given a correct answer now. Okay. Rule 88B and 88B1 and 88B2. There is this rule which says that if the tax has been belatedly paid through the credit balance, right? There are these rules which say that what should happen when you should pay the interest. 88B says that if tax has been belatedly paid through credit balance on account of delayed filing of return before commencement of proceeding, then interest is to be paid for the period of delay in filing the said return beyond the due date up to the date of filing, which means the amount on which you will pay the interest will be the tax paid by debiting the electronic cash ledger. Okay, if tax has been belatedly paid through credit balance on account of delayed filing of return, there is a delayed filing of return and you have delayed it, then on your net basis, not on gross, on your net, you have to pay interest. Clear? 88B1 is clear. 88B2 says in all other cases where interest is payable on delay in payment of tax covered by section 51, here it says period starting from the date on which tax was due to be paid till the date such tax is paid, amount of tax which remains unpaid. Okay, in all other cases would mean that you have the liability recorded in this month, you make a delay, then it's on net liability. But the sales you have not reported in this month, you have reported in next month. Then you will not get this net benefit. You will have to pay on the gross. That is what 88B2 says. And 88B3 says that where interest is payable on the amounts of ITC wrongly availed and utilized covered under section 50 subsection 3, then amount of input tax credit wrongly availed and utilized. Okay, where you have availed the credit wrongly. Now it's there in your electronic credit ledger, you have not utilized. Then you don't have to pay any interest. But if you have utilized the credit for making your output tax, then you have to make payment of interest on your wrongly availed and utilized amount, not otherwise. Clear? 88B1, B2, and B3 is very important for calculation. I'll give you an example. Payment of tax and filing of monthly returns by regular taxpayer for April 2019. Due date is again 20th May. Return for tax period April. Supplies is declared in April. The amount of liability on this was 10,000. Actual filing date is 1st June. Now he's made payment through electronic credit ledger of 6,000 and electronic cash ledger of 14,000. Interest will be calculated on what value? 4,000 only. Yes, everybody is saying that interest will be on 4,000. Now take another scenario. April month's things, the supply you have declared is for the period of March. March, you have made a supply, but you have declared in the month of April. The amount of that sale is 15,000 rupees. Actual filing date is delayed and payment is made through electronic credit ledger 10,000 and electronic cash ledger 5,000. Now interest will be calculated on what amount? interest is on 15,000, not on 5,000, Divyanshi. It is on 15,000 because the turnover of this month you have not declared in turnover of this return. This is the turnover of previous months which you have declared now. So interest will be calculated on 15,000. Okay. That is what rule 88B1 and 88B2 is saying. Ritesh, not on 5,000, it will be on 15,000. Okay. Now proceeding further on transfer of credit, section 53 and section 18 says that the credit of IGST, which is utilized for payment of CGST, has to be restored to CGST. And similarly, the credit of SGST utilized for payment of IGST has to be utilized for thing. So what I'm trying to say here is the output tax, we have paid CGST, we have utilized CGST, CGST payable is available here. Now, when there is an output IGST, you will utilize the input IGST, IGST payable, you will utilize this balance credit, right? So in this case, what happens? Similarly, when IGST credit is utilized there, then the section says that the IGST becomes an adjustment to the effect of state and central government. Hence, it necessitates the availability of correct data or information with the GSTN for proper settlement and apportionment of fund transfer, which means that whatever transfers you're doing, the ITC of CGST, which is utilized for payment of IGST, then the amount equivalent to the ITC so used, this ITC which you have used, is transferred by the central government from CGST account to IGST account. So this section says that backend how the government will work. For that, the enabling provision is that any ITC which is being utilized from C to I, okay, that will get transferred by the central government from CGST account to IGST account. Similarly, if you are utilizing the ITC of IGST for payment of CGST, UTGST, and SGST, then the amount equivalent to the credit which will be utilized will be transferred by central government from IGST account to the respective CGST and SGST account. And if it is utilized for payment of SGST, the amount equivalent of ITC so used will be transferred by the central government from IGST account to the respective state government's account. That is what these two sections tell us in a nutshell. So that was all about payment of taxes. If you have any questions, you can ask. Can you explain rule 88B once again? 88B says, 88B1 says that tax has to be paid on the first. 88B1 says that whatever is your balance in you're making the tax payment from your electronic cash ledger, on that only you pay the interest. From your electronic credit ledger, what you're paying, on that you don't pay interest. That's fine. 88B2 says that all other cases, which means any tax liability of a different month, the sale happened in March, if you show it in the month of April, here you don't expect that you will get the benefit of net. Then what will happen? You will misutilize it, right? So previous month's liability, which you are including in this month, on that liability, you can't make the payment on your net basis. You have to pay on the gross basis. Okay, that is what 88B2 says. 88B3 says that if you have utilized a credit wrongly, now you have to reverse it, correct? So I will reverse it. I have to pay interest, right? Now I will pay interest if I have utilized the credit. If it is lying in my electronic credit ledger and I have not utilized it. So 10,000 rupees credit I've taken. In my credit ledger, there is 50,000 rupees. I've utilized from the balance 40,000 for my tax payment. So this 10,000 is intact. So when the credit ledger is intact to the extent of my wrongly availed credit, I don't have to pay interest. That is what 88B is saying. I have to reverse, I will reverse that 10,000. But no interest will be payable in such case. Provision in slide number 35. This is what is we were discussing on the interest. This is the interest gross liability, net liability is what we were discussing. Section 50 and empowered through these rules is what we were discussing. If the transfer of ITC to distinct person is same manner as it used to settle the output liability, no, output liability from cash ledger, credit ledger, you flow it. But when you have to transfer to distinct person, then there is no rule. How much you want to transfer, you can transfer, but there should not be any liability in your liability register. If it is cleared, then you can transfer it. Okay, any more questions? Clear. Good, Nishtala. Anybody else? Okay. If there are no more questions, can wind it up. Thank you very much. We'll catch up again day after tomorrow and discuss on TDS and TCS provisions. Suppose in April 1 lakh outward is shown, out of the 10,000 belongs to last month's, right? Then what will be the gross? So on 10,000, you have to pay full interest. On 1 lakh, you have to see whether you are utilizing from electronic credit ledger, then no interest because April 90,000 is current month's transaction itself. But if you have delayed returns for April, okay, then you have to see from the 1 lakh how much is gross and how much is net. From 1 lakh, if how much is net, on that you'll pay interest. But on 10,000, you'll pay full interest because 10,000 is a transaction of the month of March. Only end date has to be considered, Himlata. So start date has to not be considered. So for the 20th, we consider from 21st. So you have to consider from the next day. Thank you. Thank you, everyone.